All right, folks, welcome back to the channel. Today, I'll be sharing 4 stocks that are on the verge of giving powerful breakouts. So, grab a cup of coffee, sit back, and make sure you stick around till the very end because every stock on this list has something unique to offer, and you don't want to miss a single detail. But first, let's quickly check in on the broader markets, especially now that the Fed announcement is out of the way. Oh boy, it's been a bit of a rough week. The Nasdaq dropped by 2.22%, the S&P 500 slid by 2.2%, and the Dow Jones declined by 2.25%. It's clear the markets have been under pressure with a bearish tone setting the stage. Keep this in mind as we dive into our picks for short-term opportunities. Oh, and remember, these picks are purely for swing trades, focusing heavily on technical analysis. We'll touch on fund fundamentals briefly, but this is not investment advice. Always do your research. First stock, Byrna Technologies, Inc. Let's kick things off with Byrna Technologies, Inc., a company in the industrial sector with a market cap of $690 million, putting it firmly in the small cap category. Byrna Technologies specializes in less lethal self-defense technology, offering innovative personal security solutions. They operate globally, covering markets in the United States, South Africa, Europe, South America, Asia, and Canada. Now, here's the lowdown on the numbers. The company reported an income of $2 million on sales of $73 million, with a profit margin of just over 3%. Not exactly jaw-dropping, but hey, a profit is a profit. Their PE ratio is a whopping 313, and the EPS stands at 9 cents. Oh, and one more thing. This company doesn't offer a dividend. All right, let's shift gears to the technical chart for Byrna Technologies. We're looking at the weekly time frame here. The stock hit an all-time high of $30 back in August 2021. Right now, it's trading just 3% shy of that level. That's huge. Why? Because this stock's been consolidating for 3.4 years, and such prolonged consolidations often lead to explosive moves once a breakout happens. Here's what I'd suggest. Closely monitor how the stock behaves around this resistance level. If it breaks through with strong volume, it could signal a significant rally. However, if it fails to break out and shows signs of rejection, it could be a great opportunity for short positions. The stock market's like a puzzle, and Byrna's chart is one intriguing piece right now. Second stock, Gladstone Capital Corp. Next up, we have Gladstone Capital Corp., a player in the financial sector with a market cap of $611 million, also a small cap stock. Gladstone is a specialty finance company that invests in debt securities, including senior term loans and subordinated loans, primarily in small and medium-sized companies. And their focus is on businesses with potential for cash flow growth, experienced management teams, and solid collateral. Looking at their financials, Gladstone generated $96 million in sales and boasts an impressive dividend yield of 6.53%. The PE ratio stands at 7.65, while the EPS is a robust $3.58. These numbers show a steady, income-generating business model, perfect for those who appreciate solid dividends. Now, let's analyze the monthly chart for Gladstone Capital. This stock hit a peak of $28 way back in April 2010. Yes, you heard that right. 14 and a half years ago. And now it's sitting just 2.5% below that level. This is a classic setup where the stock could finally reclaim that multi-decade resistance. If Gladstone manages to break out above $28 with conviction, it could indicate a long-term trend reversal, a rare and exciting event. On the other hand, if it struggles at this level, it might set the stage for a sharp pullback, opening the door for shorting opportunities. Keep an eye out for volume spikes and candle patterns near this resistance. Remember that magic stock everyone promised would 10x but ended up tanking 30%? Yeah, this isn't that kind of channel. No hype here. Just real talk based on the charts. Next on the list is Kroger Co., a major player in the consumer defensive sector with a market cap of $45 billion, categorizing it as a large cap stock. Kroger operates supermarkets, multi-department stores, and fulfillment centers. Their well-known brands include Big K, Smartway, Simple Truth, and Simple Truth Organic. Now let's get into their numbers. Kroger generated an income of $2.7 billion on sales of a staggering $149 billion, giving it a profit margin of nearly 2%. The PE ratio is a moderate 16, while the EPS stands at $3.78. For income seekers, Kroger offers a dividend yield of 1.97%. All right, here comes the exciting part, the technical chart. We're analyzing Kroger on the weekly time frame. Back in March 2022, the stock reached a high of $62.80. Currently, it's trading just 1.5% below this level, and that's significant. Why? Because Kroger has been consolidating for 2.5 years, creating a potential springboard for its next major move. If it can break past this resistance level, we could see a strong rally fueled by investor confidence and technical momentum. Watch for increased trading volume. It's a key indicator that institutions might be stepping in. On the flip side, if Kroger fails to break out and gets rejected, there's potential for a pullback to key support levels, creating opportunities for short trades. Always let the chart guide your decisions. Volume, candlestick formations, and momentum indicators will be your best friends here. Guys, no flashy promises, just actionable insights. Let's see what Kroger's chart tells us in the coming days. Fourth stock, Kingsoft Cloud Holdings Limited ADR. The final stock on today's list is Kingsoft Cloud Holdings Limited, a company in the technology sector with a market cap of $2.4 billion, making it a mid-cap stock. Kingsoft Cloud provides cloud storage and computing services. They cater to various industries with tailored solutions across public cloud, enterprise cloud, and AI-driven IoT services. Now for the fundamentals. The company posted $1 billion in sales, but reported a loss of $285 million, resulting in a negative profit margin of 28%. While there's no PE ratio due to the losses, the EPS is at negative $1.18. Let's dig into the daily chart, which is where things get really interesting. The stock hit a high of $10 in April 2023. That's just over a year and a half ago. Right now, it's trading 6% below that level, which suggests it's testing a critical resistance zone. Here's the key takeaway. If Kingsoft Cloud can break through this level with strong volume, it could signal the start of a bullish run, especially given its positioning in the high-growth cloud computing space. But, and this is a big but, if the stock falters here and fails to sustain momentum, it could spell a correction. Watch out for bearish reversal patterns like shooting stars or bearish engulfing candles near the resistance zone. The cloud market may be booming, but as always, let the chart lead the way. Kingsoft could surprise us either way. And that's a wrap for today's video, folks. I hope you found these insights helpful. Remember, the stocks we discussed are for educational purposes only, not investment advice. If you enjoyed this breakdown and want more no-hype actionable content, hit that subscribe button and give this video a thumbs up. The stock market is full of opportunities, but staying informed and disciplined is the real game changer. Thanks for tuning in, take care, and I'll catch you in the next video.